Hi viewers, welcome to Manimandan TV. Today we are with C. Hanuman sir. Today's topic is fixed income funds of rupees 1.2 lakh crores outflow in September month.
Yes.
Sir, what is this news regarding?
So many people are investing in financial assets because of strong economy and confidence in Indian economy. Means financial assets mean debt funds, equity funds, mutual funds. It means all these people are investing in shares directly. Means debts, means loans or certificate, financial certificates, deposits like that. And if they are unable to invest directly, they are going for mutual funds.
Hmm.
So there are mutual funds are also several types of mutual funds are there, which are investing on debt funds only. Means only they will give only loans, and they are investing shares, they are investing bonds, investing real estate, investing infrastructure. Many types of funds are coming, and fixed income funds is one of that fund. Means any person who wants, so suppose he wants to have monthly 25,000 per month. So he has to be given 25,000 per month. So how much he has to invest now? Maybe at a time or SIP, systematic investment plan like that.
Yes.
So what is happening is because of many people now becoming more aware about the share market or mutual fund. Earlier, the people who invested in fixed income funds, they are withdrawing from that and they are investing directly
Hmm.
in those funds or means other assets like gold, silver, or shares invested directly. So they are withdrawing money from fixed income funds to invest in other sectors, or maybe for expenditure, maybe marriages or house purchase, vehicle purchase, children education, maybe any reason like that. So in the month of September itself, nearly from these fixed income funds, 1,02,000 crores have been withdrawn. So this is a remarkable number. Of course, there are more than 50, 25, 30 lakh crores is there funds in those funds. But 1 lakh crore is withdrawn is a very significant figure in only in 1 month. In the month of August, only 8,000 crores were returned, whereas in the month of July, 1 lakh crores has been came into fixed income fund.
Hmm.
So there are 16 debt funds there. Means debt fund means these funds were concentrating on debts, means giving loans, maybe bank deposits, government securities, bonds. This is not related to fluctuations in share market. They will get fixed income. So out of the 60 debt funds, uh, 12 debt funds investors have withdrawn from their fixed income funds.
Okay.
Means out of 16 fixed income funds, 12 funds have been reported with an outflow of nearly 1 lakh crore from the debt market. So this is the information from Association of Mutual Funds in India. This maintains the records of amounts collected by mutual funds and amounts with the mutual funds and amounts how many inflow, outflow. This is the record as well. So, and one more reason. See this one of the means important figure. 1 lakh crore withdrawal in 1 month, which is not a. People are willing to go directly, or people are willing to reimburse the spending,
Hmm.
or people are willing to not willing to have fixed income, or they are willing to take risk. Maybe that is the reason. Due to quarter end and also the liquidity adjustments, quarterly September means quarterly liquidity adjustments, advanced tax relation issues may make them to withdraw and fulfill the commitments as per the advanced tax or quarterly commitments, maybe insurance premiums or anything like that. This outflow reduced fixed income funds by 5%. Means out of 18 lakh crores, 18.7 lakh crores funds in fixed income mutual funds, 5%, nearly more than 5% has been withdrawn in the month of September. Now it became 18 lakhs out of from 18 lakhs to 18.7, it became to 17.8 lakh crores at the September end. This is the funds available with fixed income funds. And out of this also, 66,000 crore from market funds are withdrawn, 70,000 crores short duration funds, and all these 13,000 crores liquid funds are the steepest level of 60,000 crore, followed by money market funds is only 18,000 crores, and ultra short term duration 13,000 crores. So with this, nearly 1 lakh crores have been withdrawn in this fixed income fund sector. See, what is happening is, because of this is the advantage of giving means threshold limit for income tax bracket increased from earlier to 2.5 lakhs. It is increased to 7 lakhs. Up to 3 lakhs no tax. After from 3 lakhs to 7 lakhs, you have to file, but there is no tax liability. After 7, the tax liability will come. So because of this increase in income, many people are declaring income, and they are declaring their correct incomes, and they are paying taxes. And what are the money available with them in accounts? They are investing in funds, maybe fixed income funds, or mutual funds, or debt funds, or equity funds, wealth funds, growth funds, infrastructure funds, anything they are investing. So this is the, see, we are seeing after change of nearly 4 to 5 years, this is a change happening in favor of the economy becoming formal. Earlier, 1/3 was used to be in account formal economy, 2/3 used to be in an informal economy, unaccounted economy. Now it is reversed. 1/3 is unaccounted, 2/3 is accounted economy. With this becomes, many people, those are investing ideal assets, maybe gold or plots or silver or anything. They are selling those assets and converting that money, paying taxes, and making investing in financial assets. So this is the change happening from last 10 years, more than we can say more than 78 years. So this is a welcome situation. But withdrawing from a fixed income fund may not, it is not negative aspect. Means we feel that these people are those who are withdrawing money from fixed income fund. They are investing in some other equity market only, maybe through direct equity or through demat accounts, or through other mutual funds based on equity funds, or wealth funds, or growth funds, like that, instead of going for fixed income. Fixed income always will be, risk will be less, income also will be less. If you take more risk, you may get more income. So people are willing to take more risk, and if they are able, if they are lucky, they can earn more also than the fixed income. So they are preferring to go for taking risk and investing in market linked investments. Maybe this is the reason. And also sometimes because September happens to be festival season, and also tax compliances, many other cash issues also are there. This may be the reason people are withdrawn. But nearly, we can say, out of 1 lakh crore withdrawn from September, nearly at least 80,000 crores might have been reinvested in some other form of financial asset, not as spending. This is my opinion. Maybe it's one of the good symptoms, but also it is discouraging that people are withdrawing from fixed income funds. Majority of the fixed income funds will be contributed by mainly senior citizens who doesn't want to take risk. Maybe this may be any person who might invest in the withdraw.